Hello and welcome to your June 11th daily briefing. Today we're going to talk about the second stimulus check and some updates with the next stimulus package, as well as some really interesting stock market news that I'm going to cover later on in this video. Before I get into it, please consider hitting the like button, as it really does make a difference on my analytics. It helps push this video out to a wider audience, and I personally would just appreciate it very much. So let's get right into it. In second stimulus check news, the White House just today stated that they will not discuss another stimulus package until mid to late July, when Congress returns from its recess. Now remember, Congress will take a 2-week recess starting the 3rd of July, and basically nothing's going to get done for 2 weeks after the 3rd of July. And this news shouldn't come as a huge surprise to any of my regular listeners, because for a couple weeks now I've been saying that this exact situation will likely happen, looking at all the available information we had at the time. This is just even more confirmation of that. And just a few days ago, I broke down a calendar of when we can expect the next stimulus on each path of its journey, and we're currently right on track with that. The next stimulus will likely be passed as a bill through the Senate and the House in the week of the 20th. The bill will then need approval from the President, which will likely happen the following week, just in time for the pandemic unemployment insurance to expire on the 31st of July. I would be really surprised to not see some kind of bill or at least amendment to unemployment, to the additional unemployment, before the 31st of July when it expires, because that's a real hot ticket item right now. And it has an expiration date, so there's going to be, some urgency to at least address that before the 31st. As far as what will be on the next stimulus bill, we can almost guarantee there's going to be increased liability protection for businesses who reopen. If you don't run a business, you might be thinking, whatever, why would I care if businesses don't have as much liability? This doesn't apply to me. Why are you talking about this? Well, you should care. If business owners are scared to open, that means there's going to be fewer jobs for the general population, which means less spending overall in the economy, which leads to an even longer recession and more hardship over the long term. Even the general concept of just business liability protection is much more important than you could ever imagine. The creation of the business entity, like an LLC, absolutely exploded the growth of economic progress, because business owners were more willing to take risks because they weren't personally liable for risks that the business takes. So liability protection is huge to allow businesses to take risks and potentially produce more. It'll get our economy back on track quicker. That tangent aside, we'll also very likely see a change or extension of increased unemployment, and we're about 50 to 60% odds of seeing a second direct stimulus payment. What exactly that'll come out to be, it's probably going to be something like a $1,200 payment that is just like the first round, and maybe in combination with some kind of payroll tax credit that helps out those who are working. That would amount to around 7% savings in your net pay for each paycheck. So it's not a huge amount, but it's definitely something. Heck, I'll take anything I can get. An interesting note is that the Trump administration estimates that less than half of the first stimulus bills, including the CARES Act, have actually been spent. For example, only $22 billion of the $500 billion set aside for the Main Street Business Lending Program has actually been spent. That's way less than half. That's less than 10%. So here's an idea. There's over $450 billion in funding sitting there for mid-sized businesses through that lending program. We could take $180 billion of that and get everyone a second stimulus check with an identical round as the first one. No more funds would be needed to be allocated, because this is already allocated. The funds are there, ready to be spent as businesses go and apply. So it wouldn't necessarily increase the debt. Yes, if they didn't spend it at all, it could be returned, or however exactly that works, and it wouldn't increase the debt either. But we're just brainstorming. All I'm saying is there are solutions out there. Moving on to stock market news. You know how much I hate to toot my own horn, But the stock market had a bit of a reality check today in reaction to new COVID cases as a result of reopening. The number of confirmed COVID cases topped 2 million today in the US, with some states who are reopening quickly seeing the biggest increases in cases, including Texas, North Carolina, and Arizona. So I'm out here reporting in a hot spot in Arizona. Good thing I basically never go anywhere but my own house and to work, and there's only a few people in the office here, so I'll probably survive, but it's one of the 3 major hotspots. Anyways, the Dow Jones had its biggest one-day loss since March. As of the recording of this video, the Dow is down 6.43% just today. The S&P 500 is down a similar 5.6% for the day, and the NASDAQ is down 4.86%. The NASDAQ, who hit record high levels just the other day, across 10,000 just the other day. And while we're taking a look at all this, let's also take a look at Boeing and Airbus. Now, last week I criticized those companies' stock prices and investors who are hyping up these companies, and they increased the prices of each individual stock by more than 40%. I noted that although the prices increased 40%, when I looked at it, both companies showed record low sales with little to no sign of improving soon. Even Airbus showed 0 orders for the last few months. And airports are down more than 70% in passengers compared to last year. I said there seems to be no fundamental reason why these prices have increased beside investor hype. Yes, like Boeing received some huge stimulus payment from the government. However, that would have already been counted for. That wasn't part of the 40% increase. So, looking at Boeing, who I criticized for being shot up so high last week. Boeing, since Monday, has decreased in price by 24.7%. And we have Airbus, who decreased in a similar 20.4% since Monday. And I'd like to point out that I'm not celebrating the markets or these companies decreasing, because I badly want the economy to get back on its feet. I want businesses to thrive again. I want my business to thrive again. But I believe that the markets should grow at a steady, reasonable pace that is grounded in reality. That's all I'm saying. Saying prices deserve to be at pre-pandemic highs, like I heard several people saying just last week or even earlier this week, despite the fact that over 40 million people are out of work and there is an ongoing pandemic that we aren't 100% sure what exactly is going to happen. It's just crazy talk to say that the markets deserve to be higher now than they were in 2019. So the question is, where will the markets go from here? That I'm not really sure. I can't make a confident assessment. This could be the correction we needed to get down to a more realistic pace. Things could catch up to these prices. I think the Dow and the S&P are still probably like 6 to 10% higher than they actually deserve to be. But whether that will happen or not, I'm not really totally sure, because there still is a lot of hype that things are going to recover quickly. And as a sidebar here, if you'd like to get a couple free stocks and help out this channel, help me out, check out the link in the description for Webull. You'll receive 2 completely free stocks once you deposit $100 into your brokerage account. You actually don't have to spend the $100, you just have to deposit it. And you can be a part of this wild stock market ride without actually having to spend any of your own money, because you receive some free stocks. So back to it. We know it's been a crazy day, but it wasn't all stock market losers today. We had a few increases, including Grubhub, who increased 4.5% today. The increase was due to the $7.8 billion acquisition by European food delivery company called Just Eat Takeaway. They purchased Grubhub. Shareholders of Grubhub will trade their stocks for equivalent Just Eat Takeaway shares. This came after Uber Eats tried to also purchase Grubhub. However, it looks like that one fell through. Zoom stock also increased today, which really comes at no surprise. If the pandemic shows signs of being worse, you can pretty much count on Zoom stock to increase. This kind of has to be a weird mental dilemma for the workers and founders and executives at Zoom. You know they have to be thinking to themselves, you know, I'd like this pandemic to be over with, but on the other hand, the longer this pandemic lasts, the better our company's gonna do. Is there a conspiracy out there yet that Zoom single-handedly started the pandemic? If not, I feel like we might have to start one. Anyways, I'm done talking for the day. I'd like to thank you for watching, and I hope you have a profitable day.